Hey everyone, Adobe's stock price is jumping following an excellent quarterly financial update. I'll review those numbers that are sending the stock price higher. I'll also update my buy recommendation for Adobe stock in this video. Remember, coming into this quarter, I've had Adobe stock rated as a buy. In fact, I've had Adobe stock rated as a buy for over a couple of years now. I've liked the company's digital products, and the valuation combined with the company's growth in revenue and profit and cash flow looked to me like an attractive investment. So you're going to want to tune in to see if I'm changing that recommendation. So let's get started with the financial performance. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so Adobe CFO saying that Adobe delivered outstanding second quarter results, which positioned us to raise our annual guidance. That is true. The quarter went so well that the company is upgrading what they are expecting for their fiscal year in 2024. And given there's only 2 quarters remaining for the fiscal year, that performance had to have been so strong and the confidence so strong to give Adobe management confidence to raise that full year 2024 outlook. As I mentioned, Adobe stock price is jumping following these earnings results. You can see that big increase here, up to $525 per share as of this recording. Still, Adobe stock price is down year to date from $600 per share to begin. It had been underperforming significantly year to date, and this performance really brought the company back up slightly, but still down for the year. As I highlighted, I have had Adobe stock rated as a buy, and I last updated that recommendation on June 5th, telling investors that I still thought the stock was a buy then, and I'll update this recommendation by the end of this video. Now looking more specifically at the company's financial performance, second quarter revenue of $5.31 billion was up by 10% from the same quarter the prior year, and earnings per share of $3.49 was up 24% year over year. Excellent growth numbers to be sure. Management saying that their success is driven by growing customer value through an innovative product roadmap. And that's true. I've seen Adobe make strong steps forward in terms of their product offering, making their products more valuable to customers, which is increasing interest from customers in Adobe's purchasing Adobe's services. The company is infusing its products with artificial intelligence, making it that much more useful for creators. Now, management expects these trends to continue, and that's why they've upgraded their recommendations, their targets for the rest of the year. Also, one thing that boosted earnings per share this quarter from the previous quarter was that failed acquisition of Figma. Remember, they tried to make that acquisition, and I was not a fan of that acquisition to begin with. I felt they overpaid for the acquisition, and so when it didn't go through, I was slightly pleased for investors that it did not go through. However, there was a stiff penalty, $1 billion Adobe had to pay because the acquisition didn't go through. I talked about this in my earnings preview video, how it was having to pay that $1 billion acquisition termination fee, and how this is common for companies that when they make an acquisition bid, they have to put up that big fee just in case the acquisition doesn't go through, because the company that you're acquiring is allowing you to come in and conduct due diligence, look at their numbers, open their books, and all of which causes mass inconvenience for the company you're trying to acquire. So one of the only reasons they will agree to that is if you agree to pay a termination fee just in case, for whatever reason, the acquisition doesn't go through, whether it's because regulators do not approve it or whether you step out and cancel at the last minute, whatever the case might be. They want that fee in there to ensure themselves to recoup some of the cost from having to open their books and allow you to look at their business and everything inside. Now, Adobe stock is trading at a forward price to earnings of 25.74. It's less than where it started in the beginning of 2024, and it's on the lower end of its valuation according to the forward price to earnings metric, going back all the way to July of 2021, where its forward PE ratio jumped over 48 at one point before falling all the way down to a forward PE of around 12 to 13. If you recall, if you've been around my channel for more than a year, in 2023, Adobe was on my list of top stocks to buy because I felt this valuation was really, really cheap. And so this year, Adobe hasn't been on my list of top stocks to buy, but I've still recommended the stock as a buy, even though the valuation had increased meaningfully from those lows in 2023. Still at a forward price to earnings of 25.74. If I was to update my recommendation of Adobe stock, whether or not I think it's a buy, hold, or a sell, I think at current valuations, with its prospects in artificial intelligence and its support of the creator economy, I still think the company is a buy, even at these valuations, even with the increase, because remember, it's still not up on the year, it's still down on the year. So it's not like investors have to feel like, oh, the price has increased too much and it's due for a pullback. That's not the case. It's the opposite. Adobe is trailing the major indexes significantly on the year, and this bounce up is just a slight rebound from where it was earlier, trading at closer to $430 per share after it started the year at close to $600 per share. So that was a nice rebound following these excellent earnings announcement. But even after the rebound, you can see it's not trading at a prohibitively expensive valuation. And management highlighted that things are going well. They're increasing their annual targets, and management is also repurchasing shares, which is typically a signal that the company feels that their shares are undervalued. Regardless, the purchase of company of their own shares reduces the number of shares outstanding, which creates an increase in the earnings per share because there are fewer shares to split among the existing net profit. And net profit is also increasing for Adobe. So many reasons to like Adobe stock. Of course, there are risks, and one of the risks is that Adobe faces competition from providers that are a little more user-friendly. Adobe is, one of the more technical creative cloud services. You have to have a bit more skill to use Adobe compared with, for instance, Canva, which is easier to use, and it's gaining traction in the industry because of its ease of use. And so Adobe is working to offer solutions to that. But for now, it's still facing that competition from providers that are coming in at the bottom end of the market to try and capture those creators and those use cases where the user may not have the technical expertise that might be needed to use Adobe's products. And so all in all, I still think, even given the risks compared with the potential reward, I still think Adobe stock is a buy at current valuations. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.